the more scale the economy acquires, the more concentrated market share becomes in fewer and fewer players across different industries. That's why you saw 7-Eleven display sari-sari stores. You guys often hear me say that why is there no Amazon of the Philippines? Because of AI, it's going to make the scale players even more profitable at the expense of labor. So the primary mode by which we participate in entrepreneurial risk-taking would be through investing.
And we are back. And so you are listening to DragonFi's Dividend Investor podcast. And so in our previous episode, we also had Sir John there, and we talked about how currently it's the age of investors and how AI is fast tracking everything or fast tracking all of this. And so we also mentioned how we just launched a revolutionary product here in the Philippines, right? PERA Plus of DragonFi. So, Sir John, for our audience who might not know or haven't heard of this yet, could you please tell us more about like what PERA Plus is?
Yep. So, Aaron, you correctly mentioned that it's a revolutionary new product, right? But the PERA was actually launched in 2016. But now it's the more potent version. Potent version from the point of view of the actual program because of SEMEPA, which is giving tax benefits to employers who provide PERA to their employees as part of their compensation package. Revolutionary from the standpoint, more potent from the standpoint that DragonFi is launching it with a modern refresh, modern and a full digital experience.
So what you're saying is like our clients or people who use PERA Plus would have a lot more tax benefits. It's much more seamless because we're giving it to them at like at a better experience.
The clients' tax benefits will be practically the same, but since now the employers have a tax incentive to really propagate PERA, now I believe it's going to gain traction. It's going to drive mass adoption together with how we're providing a more seamless experience. Because previous administrators, the problem was they didn't have an app. Clients didn't even have a view of the current state of their investments. And they needed to go to a bank branch just to open a PERA account. So how do you drive mass adoption? Let's say, for example, if you're a BPO with 20,000, 100,000 employees, are you going to tell your 100,000 employees to visit a bank branch and open a PERA account? You know, a paper application at that. So it was never going to really be adopted at scale.
You mentioned, Sir John, about these tax advantages, right? Like in reality or in practical use, like how do they look like? And in what way could they help investors out there? Because I believe even before you kept on mentioning about margin of safety. So like how does those two come into play together?
So I truly believe that PERA, the current version, the PERA is a game changer in terms of how Filipinos will prepare for retirement. Because now they have a margin of safety, as you mentioned. So when we say margin of safety, that it increases the odds of your investment bearing fruit. So in the PERA's case, because it's a tax advantage account, you have a lot of benefits in terms of, let's say, if you were to incorporate, if your employer were to incorporate PERA into your compensation package, it actually eliminates the withholding taxes if it's a corporate contribution. Let's say, for example, at the 200,000 maximum level, right? For those individuals at the 15% marginal tax bracket. So these are individuals, I believe, starting from around 20,800 to, I think, 30 something. At the 15% marginal tax bracket, if you contribute 200,000 pesos to your PERA account as part of your compensation package, you save 30,000 pesos worth of withholding taxes. Plus, you gain an additional 10,000 pesos from the 5% tax credit. So imagine at the 35% tax bracket, you save a total of 80,000 pesos worth of taxes.
Out of the 200,000.
So from day one, you're already ahead between 20 to 40% on your investment. So that's why I've often said that it's a game changer.
So it's like buying, if I were to use this PERA product then and to buy like stocks, for example, it's like as if I'm buying it at discounted levels. Because for example, I used the 200,000 and practically it's like I'm putting up, like, for example, 140,000 pesos lang.
Correct.
And then 60,000 I should have been paying to the government. It's paid to the PERA account, right?
That's correct. So it's the government's way of helping out Filipinos towards investing and saving for their retirement, right? So again, you start ahead of the gate before the race has even begun. You're already ahead of the curve. In this sense, that's why I keep on saying, and I know you're probably going to tell me this later. I keep on saying, for the first time, a majority of Filipinos can now dream.
That's correct. And I mean, psychologically as well, Sir John, I myself have been investing before na, right? There's like the psychological aspect na if you're ahead, it's a much better experience in investing as compared na you're still battling if you're in the red tapos biglang nasa green ka.
Yep.
At least in this case, you're starting out winning, right?
What I've encountered as we presented PERA to different corporations in the country is that it's evident to me that the typical Filipino potential investor is very highly risk averse. They ask questions such as, is the principal guaranteed? Which actually, if you're a seasoned investor, immediately understand that risk is part of the process. And in reality, certainty is inimical, is actually detrimental to total returns, right? If there's certainty, that means you're investing at the risk-free rate. So if you're investing at the risk-free rate, you have to accept a lower rate of return right away. So volatility is actually beneficial to educated investors.
For our audience, Sir John, what does risk-free rate mean?
So the risk-free rate is usually the yield of the short-term government fixed income products.
Basically, this is the closest thing that you could get to like sure or guaranteed money, right? Guaranteed returns.
Yep.
Okay. Speaking, Sir John, of all the taxes that we can now save because of this new PERA Plus product, right? I mean, one of my goals, obviously, I think everyone's goals for that matter, is to retire comfortably, right? So how can I paint those two concepts together of retiring early using PERA Plus? Like, for example, like I max contribute my PERA Plus account, 200,000 yearly, and then I do it for 30 years, for example. So how does the numbers work out?
So let's say you contribute 200,000 per annum for 30 years. Let's say you just put it at a 6%. We peg the rate of return at 6%, a conservative rate of return at 6%. That will translate to around 15.8 million after 30 years. That is why I'm saying that it really gives the Filipinos the ability to dream. Because before this, the typical way we Filipinos prepare for retirement is to contribute to our social security.
Right.
But if you look at the average payout of social security, it's just 5,000 pesos. 5,000 pesos. Even actually, if you contribute, let's say from day one, which is unrealistic, from day one, the moment you graduate from university, from day one, you contribute the maximum amount of 21,000 pesos per year to your SSS. Your rate of return when you retire, if let's say, for example, you live to the average age of a Filipino, which is the life expectancy of a Filipino, which is 72 years, your rate of return is around 3.8%, which is horrible. It's just a little bit above the average inflation rate. At the same time, Social Security, you don't actually own any assets. It's just a promise of future cash payout that may or may not be there, according to their own estimates. SSS is touted to be in deficit by 2039 and fully depleted by 2054. Compare that to PERA, where everything that you invest, every security that you buy, you own. And then you have the added benefit of growing this tax-free. Within the PERA ecosystem, there's no 10% dividend tax when you're investing in dividend stocks. And there's no 20% withholding tax on interest income. Lastly, when you bequeath it to the next generation, your beneficiaries, there's no estate taxes. So you're able to create generational wealth, right? It engenders generational wealth creation.
That's why in most pension systems globally, you see the trend that they increase the required contributions, right?
For
Sometimes,
Social Security.
especially when the population is nearing when they get older and older, right?
Correct.
You have to fund the payouts.
Public pension systems all over the world, it always ends up in this fashion. In the US, for example, their own Social Security is projected to be in deficit by 2035. So imagine if that's the US, a very developed and efficient economy.
Right.
They're still meeting the same challenges for their public pension system. That's why the Americans own PERA, their 401ks, Roth IRAs, their individual retirement account, which is essentially what our PERA is, has become the de facto way by which Americans prepare for retirement. 60% of American adults have a 401k, Roth IRA, an individual retirement account. And $13 trillion have been contributed from these retirement accounts to a $50 trillion market cap US stock market. So imagine the positive externalities beyond just being able to prepare for retirement. It's actually contributing to their capital markets and economic growth.
And not to mention, when talking about these pension systems, the main advantage talaga of using PERA Plus is that what you invested isn't taxed. But in this, for example, in most pension systems, when you get the money, it's taxed first before you get to put it into the pension system, right?
That's correct.
So if compounding and investing is so powerful, Sir John, why don't you think a lot of Filipinos don't utilize it for their retirement?
Okay, this is what I've seen. Every VC, foreign VC, have communicated to me that the Philippines, just like our Southeast Asian peers, is very consumption driven, right? But if you compare us, for example, to Thailand, Indonesia, Malaysia, they're investing public. They actually participate more in their capital markets compared to Filipinos. I do feel that as a nation, we don't have that investing culture wherein we know how to delay gratification. We want to spend what we earn right away, which I guess is great in the present, right? You get to have a nice lifestyle, but then once you retire and you don't have a steady source of income, this is when it begins to bite you. And then what we often do is we then rely on the next generation, our kids, to fund our retirement, which is not the most ideal circumstance, right? Just imagine. So I'm a father to a 15 and 11-year-old. When my son is, let's say, in his 20s, he's just at the onset of building his career. And then you're already burdening him with sustaining the lifestyle of two full-grown adults. I don't think that's what we want for the next generation, and that's why PERA and its ability to build generational wealth. You get to have a passive income portfolio when you do retire, and then you pass it on to the next generation, helping the next generation continue building generational wealth.
And you've seen this happen all over again in the US, right? There's a lot of millionaires printed through retirement accounts, right?
Correct.
Not to mention $1 million. It's not $1 million.
$1 million. I think if you Google in September of 2024, 550,000 new millionaires were minted in America by way of their retirement accounts. Yes, you may say it's because of their buoyant stock market, which plays a factor. But within the PERA ecosystem, we will be able to offer funds, houses, foreign assets. So again, Filipinos will be able to participate. For the younger contributor, let's say you're in your 20s, you could actually decide to take more risks and, let's say, for example, invest in a fund that is tracking the returns of the S&P 500.
Which is the top biggest US companies, right?
Yep, the 500 of the top US companies by market cap.
So, Sir John, I don't think it's a far-fetched idea to actually say that we could actually do the same here in the Philippines. I think PERA Plus has the potential to print the next set of millionaires, especially when they retire, and especially if they do it in the consistent way and they do it in a disciplined fashion.
Definitely, because again, you start ahead of the gate, right? Because of the tax advantage nature, you are ahead from day one.
Right. And so actually, Sir John, I'm really sold. I'm really sold to the idea. And so, but if I am someone who doesn't have the background of the stock market, like when I have the PERA Plus product already, how do I know which companies to choose, or what do I buy?
So one great feature of the DragonFi PERA Plus account is we have what you call the investing club, wherein you get to follow seasoned investors in their own PERA journey. So, for example, you get to follow me, you get to follow the creator circle. So all seasoned investors building their own PERA accounts. So essentially everybody's starting from scratch because PERA, again, the old PERA product really did not gain any traction. So everybody's starting from scratch. So it's a level playing field for all, and you get to leverage the experience of a seasoned investors in the PERA Plus account.
It's like you're having like a guide, basically.
A guide.
A guide.
The best way to put it, it's experiential learning that wherein you're actually building, and by initially obviously emulating seasoned professionals, seasoned investors, but learning in the process, because it really pays to become a better and better investor, right? I always say that the difference between a 10% and an 11% rate of return over 40 years is over 40% in terms of net asset value. The earlier you start, the earlier you start learning, and it's really, you're not just compounding money, right? You're compounding knowledge as well.
And so that's great that we could follow the investing club, right? And the creator circle. What do you think is the strategy to go for when we invest for our retirement? Like, because right now we always espouse dividend investing, right?
Yep.
Do you think it's applicable to apply it to the PERA Plus account as well?
So the answer will be nuanced. First, because the PERA Act actually benefits dividend investing, right? By taking out the 10% withholding, the 10% tax on the dividend income. And it also takes out the 20% withholding tax on interest income. Because of that particular feature, creating a passive income stream is really the way to go within the PERA program. But having said that, as I mentioned, we will be offering in the future UITFs that houses foreign assets like the S&P 500. And for more growth-minded investors who are young enough to take the volatility, I would actually recommend that they also put that as part of their PERA portfolio.
Do you think the strategy like goes along in a uniform manner, or do you think the strategy that one should take evolve as they grow older? Like, for example, do they like buy a lot more stocks as they're younger and then buy a lot less stocks when they're older? What's your take on that, Sergio?
Yeah, I mean, that's really fundamental to investing, right? Age-based investing. Obviously, the closer and closer you are to retirement, and the less able you are to stomach the cyclical nature of the markets, the more you should allocate more towards fixed income as opposed to equities.
By fixed income, like which products are these, John?
Yeah, the most basic one is money market. There's also like the government bond fund, the corporate bond funds. In the next phase, we will also be offering retail treasury bonds.
So it's all about like reallocation. Like as you're starting out, like you could be weighted a lot more on equities or local stocks. Like for example, 80%. And then as you grow older, like you lessen that and move it to, as you mentioned, fixed income.
Yep, that's correct. But you still want some level of equity. Why? Because we're living longer and longer, right? The life expectancy rate is being pushed out, and as such, you need growth in your portfolio still. So that's why I still espouse a portion of your PERA account to be dedicated towards dividend growth stocks.
Now that I have an idea of which strategy to partake in, back to the idea, for example, Sir John, I want to max out my 200,000 contribution for the PERA Plus product after 30 years. Like, what number am I looking at for retirement?
After 30 years, if you're able to do it for 30 consecutive years, you're talking about at a 6% rate of return, it's like 15.8.
15.8 million.
Yeah.
I would love to have 15.8
Exactly.
million.
Let's say from day one, you're able to do it for 40 straight years. Let's say from 25 to 65, you're actually talking about 30 million.
30 million by
Over
retirement.
30 million at a 6% rate of return. So this is why I keep on saying that now the Filipino can dream, right? By allocating your funds towards your retirement account, you're able to sustain your desired lifestyle even after you retire. And that's the important thing here.
Right. And I mean, comparing it to the current payout of the pension systems, it's quite far, right? Like the average payout of a pension system is how much? Around.
If you go by Social Security, as I mentioned, you're talking about 3.8 to 4.6% depending on your life expectancy. Let's say if you live until 80, you're talking about like 4.6% for the stream of cash flow that I mentioned. And every 1% counts, right, in investing. As I mentioned earlier, the difference between a 10 and 11% rate of return over 40 years is 40%.
And the magic here, Sir John, is that not to mention that you have around 15 million by retirement. That 15 million pesos, you could get more money, more passive money from it, right? Like for example, it's you put it into an asset that's yielding 4%, like fixed income, then that's going to give you like around 600,000 pesos per year, right?
Correct.
Which is a lot.
Which is a lot. Like, for example, the assumption here is your PERA funds are still invested, right, in income producing assets. So, like example, you mentioned 4%, but why can't it be as high as 5%, 6%, right? And so you're talking about 600,000. Then you can also withdraw from your PERA account to fund the lifestyle that you desire, right? Let's say, for example, you have 15 million and you choose to withdraw 500,000 per year, right? That will last you an additional 30 years. But let's say, for example, you liquidate everything. You can also put it in, for example, in a Pag-ibig MP2 fund. Then you're earning. Let's say, for example, Pag-ibig MP2 is still growing at a rate of return of 6 to 8%, right? Let's say at 6%, your 15 million will fetch you around 900,000 pesos a year for your retirement.
Which monthly, I think that's like 80 plus thousand pesos.
Exactly. So by delaying gratification, investing in your retirement account, when you do need the money the most, which is really during our old age, because everything piles up, right? Medical expenses and all that. You give yourself financial resilience.
Speaking of giving yourself financial resilience, Sir John, like if you are 25 years old now, like if you are back to your 25-year-old self, how would you invest with your PERA Plus account?
I'd be very aggressive. So I actually lived it, right? I started investing 22, right out of college, because it was my professional career at the beginning. And then I started doing it on a personal capacity. So I was very aggressive. I was really investing heavily in the US markets. I would do exactly the same. So within the PERA ecosystem, what I would do is I would seek out funds that are benchmarked against, let's say, the S&P 500, as I mentioned. Thereby, you are able to, in your words, partake of the growth of the very innovative US economy.
How does the portfolio allocation look like? Like percentage?
I'd probably, in my 20s, I'd probably easily do a 90-10 split. 90% in, let's say, is a UITF that's benchmarked to the S&P 500, and 10%, let's say, for example, in a money market account, which is right now yielding over 6% in the PERA ecosystem, because there's no withholding taxes, as I've mentioned. So that's how I would break it down. Then I would dynamically reallocate it as I grow older, right? Veering more towards fixed income as I age.
But for example, let's go to the nitty-gritty aspect of it, right? For example, I've been contributing to it in a monthly manner, maximum. So when do I actually buy these funds or these fixed income that you're saying? Is it on a monthly basis, or is it like when do I actually buy it?
Fixed income, you can buy anytime, right? You can just put it in the money market anytime, because there's no point, there's no timing element involved, right? There's just the yield. You just take the yield of the money market at that particular point in time. For the stock market, it depends. It depends on your individual strategy. Some people choose to, let's say, put money in the S&P 500 vehicle, where whatever it may be, let's say whether it's an ETF or a UITF, let's say, for example, for Americans, right? They just dollar cost average into it, right?
What would you go for personally?
I do a hybrid. I do a hybrid. Since obviously that's my domain expertise, I would actually have a more of a timing element into it. I would put more during market declines as opposed to just doing dollar cost averaging.
And so I'm really excited about our PERA Plus product, right, Sir John? As you mentioned, I think it's giving Filipinos out there the permission to dream, but also the ability to take action for their retirement and dreams, right?
Yep.
Although outside of an individual, like how do you think can PERA transform, especially here, the capital markets or the stock market here in the Philippines?
That's a great question. I actually view PERA as the last stand of our capital markets. I think every Filipino now, every anybody who's engaged, every Filipino who's engaged in the financial markets, know that we've have had a massive liquidity drain spanning over a decade now.
What does that mean? Like it's hard to trade our markets or invest in our markets.
It's essentially institutional investors have shunned the Philippines, right? More and more over the years. Hence, now our markets have what you call a liquidity discount because it's very illiquid, right? And people always assume, people who are not involved in the markets assume that it's a stock exchange problem or it's a stock investor problem. It doesn't involve us. But if you have an underdeveloped capital market, it actually inhibits the ability of the general population to participate in the prosperity of a nation in a more meaningful way. What do I mean? Let's say, for example, in the Philippines, how it goes is, if let's say, for example, I want to be an entrepreneur, but I wasn't born to money, then your options are you save up until you have enough money, or you raise capital from friends and family, right? A bank loan is almost impossible for a startup. So that's the problem when the capital markets are underdeveloped. Let's compare it to the gold standard, which is the US, the US, right? I've mentioned this to you before that in 1983, the Fortune 400 Americans, 60-40, there was a 60-40 split. 60% inherited their wealth, 40% were self-made. Fast forward to 2013, when their stock market really took hold after they broke the back of the hyperinflationary environment of the early 80s. Now, 70% of the Fortune 400 is self-made, and 30% inherited their wealth, right? So what happened when the stock market boomed and the capital markets developed? Now money was the commodity. What received like the preponderance of value, that what became more premium was the idea. So if you were an American with an idea, there's $6 billion in venture capital and private equity money looking for a home. So that's not true with the Philippines. Here, if you weren't born to money, it was almost impossible for you to start your own enterprise, your own business, right? I mean, there's always an exception to the rule, right? But as a general statement, that's actually true.
Basically, a more advanced capital markets and deepening our capital markets, it would allow a lot more ideas to be funded.
Exactly. It will further entrepreneurial risk taking, right? Because capital is no longer the gating element, right? It's no longer the gating element. It's how good your idea is, how good your business model is, and how good you are at executing. That's why PERA is very, very important. If this doesn't work, if this doesn't meaningfully address our capital market issue, even if it has historically worked globally, I'm actually out of ideas.
And funding is capital raising is more attractive here in the Philippines if they could have a way of an exit, right? So meaning to say, like, if our stock market is much more liquid and a lot more companies are getting listed in the stock market, then that's one of the ways that these early investors that funded your ideas could now exit.
That's exactly right. So when institutional investors like VCs and PEs invest in companies, they don't invest for the dividends because they usually invest at a multiple of some financial metric, right? So they expect to be rewarded at a multiple of some financial metric as well by way of a liquidity event. That means like an IPO, a private sale. So if you don't have a developed capital markets, this isn't possible. So in that sense, that really hinders, as I mentioned, entrepreneurial risk taking.
And so you think if our capital markets deepen like a lot more, it's going to be a lot more conducive to startups.
It's going to be a lot more conducive to startups. Definitely a lot more conducive to startups.
Also, I also remember, Sir John, you kept on talking about how since there's a liquidity discount, we don't attract as much investors and liquidity begets liquidity. So could you please tell more about that to our audience?
If you have an illiquid market, that introduces more risks to the investor, right? So imagine, let's say you are an institutional investor from the US. Let's say you decide to deploy $1 billion worth of risk capital into the Philippine Stock Exchange. Because the market is illiquid, first of all, when you do attempt to accumulate shares when you're buying, you're actually moving the market. So that in itself is an additional friction that increases the cost of your investment. Then on the flip side, when you start selling, you also impact the market. So you're also not able to exit at your desired price, close to your desired price, because there's always going to be market impact regardless of what financial market we're talking about. But because the Philippines has become highly illiquid, this is even more evident.
So you're saying there's like a lot of slippage to it. Like for example, instead of paying 1 peso to purchase the stock for them, they have to pay 110, for example,
Exactly.
1.1.
So that's 10% higher.
That's 10% higher. And then when they have to exit, it's the other way around.
It's the other way around.
Instead of selling at 2 pesos, they have to sell at like 1.9, for example.
Even maybe less, right?
Even maybe less.
So yeah.
And so, Sir John, like as you kept on telling people that now Filipinos have the ability to dream with PERA Plus, like, but for you personally, what does that mean for you personally?
Personally, for me, PERA. So DragonFi was actually incorporated for PERA. That has always been the case. When I founded DragonFi, I immediately applied for PERA. But at that point in time, the SEC had not finished the implementing rules and regulations for SEC regulated firms. So it was actually DragonFi that helped push the implementing rules and regulations along. So the reason I've always wanted PERA, this is 19 years in the making for me. I actually made PERA the centerpiece of my MBA application in 2006 when I applied to the University of Chicago. But at that point in time, I was already starting to hear the rumbles of a PERA Act in the Philippine Congress. Obviously, because of my professional background trading the U.S. equity markets, I immediately knew the benefits of having a robust retirement program in the country, individual retirement program in the country. As I mentioned, in the US, 13 trillion out of the $50 trillion US market cap comes from their retirement accounts. For my MBA application, I was actually more concerned about that aspect, the capital market development aspect, because I wanted to democratize. I wanted there to be a more democratized entrepreneurial environment in the Philippines, because as someone who did not inherit the business, right? But later on, now in my 40s, late 40s, I've realized that the more pressing and urgent issue is the lack of financial preparedness of Filipinos for their retirement. As I mentioned, as we keep on mentioning, it's a Bangko Central stat. It's not our stat. The average Social Security only pays out 5,000 pesos, and only 20% of senior citizens are covered by Social Security. Secondly, Filipinos on average only have 3 months worth of income for their retirement. And that is obviously not enough to live the next 20 years of your life.
Not to mention to support a family.
Yeah, to support a family. And so that was the mission of DragonFi to begin with. It just so happens that it took this long because it took a long time for us to secure the license, to help push along the implementing rules and regulations, and now to integrate with the BSP PERASYS, because we're actually going to be the first ones to use the BSP APIs.
How do you think the Philippines would look like if every Filipino out there had a PERA Plus account?
Oh, I think for the first time, if we were to look at the American example, and let's say if we are just able to achieve a sliver of what their retirement accounts achieve, right? It would mean a more liquid Philippine stock exchange. It would mean a more liquid capital markets in general. It would mean that like private investors, VCs, PEs investing in the Philippines. So it will really drive the level of entrepreneurship in the country, and it would actually help towards the development of infrastructure that's needed further economic development.
If you could summarize the promise of PERA in one sentence, like what would it be?
Financial freedom. That's not a sentence, but I guess in a nutshell, right? We want financial freedom for every Filipino.
Actually, Sir John, I also have prepared like a few fun questions to ask you. I usually ask these questions to the guests that I have on these podcasts. So, first off, is like outside the stock market, what do you think is your best investment?
Outside the stock market, knowledge. People assume it's a hard asset. I don't believe so. Why? Because for example, real estate, it's not democratized, right? Only a few segment of the population can actually really afford real estate. People keep on thinking that the returns are great, but the facts don't bear that out. Even if you look at the prime villages throughout Metro Manila, if you look at a long time span, you're just talking about 8%, 8 to 9%, 8 to 9% over a long period of time. So that's, and if you factor in the illiquidity surrounding those, and the fact that the non-prime real estate residential properties don't have that level of growth as well, then it's not a great investment. Then after you stay in it, it becomes a money pit, right? Because in reality, most individuals will never liquidate their residential asset, right? You would rather have it pass it on to the next generation, right?
You would often hear that's their ancestral house.
That's your
And so
ancestral
they don't
house,
want to
right?
sell it.
For those reasons, you never really get to monetize it. Okay, in fairness, but beyond the first property, then it becomes an investment, right? Beyond the first property, it becomes an investment. But I still wouldn't do it because, as I said, there's actually better gains to be had outside of the real estate.
Speaking of knowledge, Sir John, top three books that you think change the way how you invest or view the stock market.
Well, the first thing, not the book, but that's remember in the previous episode, the professor that mentioned to me scale leads to concentration, right? The second was actually attending a lecture by Eugene Fama when he said that momentum was the premier anomaly that he has ever faced. So Eugene Fama, for the people who don't know, he was the one responsible for the efficient market hypothesis that has been criticized over and over by practitioners. And when I went to Chicago in from 2007 to 2009, behavioral finance, everything shifted towards behavioral finance because it was clearly shown that the excess returns generated by the momentum factor was higher than any other investment strategy out there. So that helped me along, and the William O'Neill books, the How to Make Money in Stocks, because that gave retail investors such as myself a practical way to actually implement momentum investing.
What's one advice you would give to your younger self if you look back at the years? One advice to give the younger Sir John.
All right. So in my old trading firm, they wanted to churn the market. They wanted to go in and out, which was very detrimental to returns. We often actually lose more than we gain. And it was around my third year that I stumbled upon the William O'Neill books. And that pushed me to lengthen my holding period for my investments. And that has made all the difference. My advice is, if you're day trading, if you're churning, and then that means you're just trying to replace income. That activity for me, although I do admit that there are probably very good day traders out there, right? There are. Again, I'm after scale. I'm after exponential growth. and that is not possible for the very market participants who actually just do short-term trading.
So what you're saying is you cannot make a salary in a traditional sense out in the stock market, like you would expect like a monthly payout.
Yeah, and at the same time, I don't think it's worth the effort. The market is not going to give you what it's not willing to give. Meaning there are the times in the market wherein it's not conducive. It's not conducive, right? So essentially, what you're trying to take something from the market that it does not want to give. So rather than do that, you ride the long waves and participate in exponential growth.
And on the flip side, when the market is conducive, that's when you make, for example, like months worth of your salary or like a year worth of your salary. If
Exactly. Exactly.
then for the rest of the part, you're just like waiting for the next opportunity,
The
right?
next opportunity. Exactly. So you want the longer term waves that more dramatically impacts your portfolio.
And so I think that wraps this episode for this podcast. So Sir John, thank you for joining us today.
No, thank you, everyone. I hope I was able to actually impart a nugget of investing wisdom to the viewers.
And so that's it. So remember to subscribe to our YouTube channel and see you guys on to our next episode.